Hello. Okay, welcome guys. I am going to be getting stuck in straight away. This is my weekly live stream that I like to do. And I do believe we are live. So let's get into it. This is every Wednesday at 1 p.m. I do this live. And if you're listening in from Ireland or the UK, that's 1 p.m. So it's called a lunch and learn, I guess. But if you're listening in from the US, typically what you would call this is a breakfast briefing, given it's 8 a.m. in the state of New York City. I call it the Property Investor Roundtable. What I'm going to be doing is my usual thing. I'm going to be going through real estate news and events and the kind of stuff that is impacting the market and what's likely to be happening in the market in the next couple of months as a result of the events that are taking place in the market. In addition to that, what I'm going to talk about today is a little bit on the crypto collapse. And the reason that we want to go into that is because it's just such a big story and it's dominating the investment news. And finally, I'll throw the floor open to anyone who has any questions. And they'd like some questions on real estate investing, whether it's advice, guidance, what I think the market's going to do next, whatever it is. So you're all welcome to put your questions in the chat, and I'll be happy to do this. The best place to watch this, by the way, is over in my YouTube channel. That's Gavin J. Gallagher. If you're looking up in the search, it's called Gavin J. Gallagher on real estate. And the reason I suggest that's the best way to watch is there's actually a slideshow here that you can see what I'm talking about if I'm flipping up slides on the screen and stuff. Apart from that, I am live in TikTok at the moment. Hey guys, in TikTok, and I'm live in the Facebook group as well. I have a private Facebook group for my podcast. My podcast is called Behind the Facade Community. That's how it looks there if you're looking in on the YouTube channel. All right, guys, let's get straight into what I try to do when I'm talking about the real estate news. I try to get into, I start with a little bit of global real estate news, and then I'll talk about the more local stuff that affects me and this market here in Ireland. But we're going to start with the property sector from the Financial Times. Now, the Financial Times, it's a subscriber-only newspaper, so you can't always get in unless you're paying for it. It's not a cheap newspaper to be to be a subscriber to, but they have a great property section which covers news from all over the world. And this week, the headlines: British Land's property values slide as higher rates pinch. Now, British Land is a big PLC based in the UK, and they do a lot of big projects, and they have huge investments, and they are seeing that their property values are sliding. And this has been kind of an ongoing theme in these talks for the last number of weeks, primarily because the interest rate rise that took place as a result of the screw up by Liz Truss and her Chancellor of the Exchequer in the UK market. They came in, they upset the markets, they got everyone kind of panicking, and interest rates shot up. And as soon as interest rates shot up, that was the end of it. Once the rates went to the level that they did, all of a sudden people are predicting that rates are going to jump up to maybe 4, 5, 6%, whereas they've been at zero for so long. So what's this mean for the market? Well, when like real estate investment, property investment, it's completely and utterly correlated to the value or to the level of interest rate that is in the market. So when rates are very, very low, and if they're low for a prolonged period of time, you're going to see values tick up. And the reason is that people can afford much, much more. Their rates, because the rates are so low, they put down a small amount of money and they can buy a huge property, and they can basically take the income from the rent, and they've got almost no interest to cover on that. Makes it very attractive. You can make a lot of money. You can sit in the sidelines and just be earning plenty of cash. Problem is when eventually the rates start to swing up, and it did take about 2 or 3 years for this to happen, but suddenly they're swinging up as a result of inflation mostly. And with the inflation creeping up, it's hard to say how long this will last now. Inflation, there recently, in last week's talk, I think I read that the central bank of France, the head of the central bank, said that he expected that we would be fighting inflation for at least another 3 years. And so that's going to be interesting. I've also heard some talk about that it could take as many as 8 to 10 years to get interest rates or to get inflation back down to 2%. And that is because when it below 8%, if inflation creeps up to above 8%, it can take up to 10 years to get it back down. So God help us if that's the case, because we're looking at much, much higher interest rates for a prolonged period of time. Hopefully that's not the case, but time will tell. We've also got China's intervention in the property sector. So the government is now starting to support the property sector in China, which is a good thing. If they weren't doing that, the Chinese property market is going to be on the floor. And this all happened about a year ago. In my podcast about a year ago, I was talking about Evergrande. Now, at the time, everyone was worried about Evergrande because it is the most indebted company in the world. I think it has something like $300 billion worth of debt. And that was all fine when you have all of the assets that are kind of going with it. But the problem is, as soon as you're into property investment and as soon as the government in China turned its back on the market, it started to introduce all these rules and regulations called the 3 red lines. And the 3 red lines prevented the developers from just borrowing willy-nilly. They had to actually have certain limits, and that put them all under enormous pressure. And a couple of them have actually gone under, and a couple of the big guys have actually been taken. The government has actually stepped in and taken them over. So billionaires that were there kind of with all of their kind of wealth and flying private jets, those guys have suddenly disappeared into the woodwork because the guys just decided, the government decided they'd become too big for their boots, and let's take them down a peg or two. Now, they've extended their bank deadline for capping property sector loans, and that is one of the biggest things because the Chinese market was on the verge of collapse. There was a huge amount of social unrest as a result of it. There was people out there that had paid mortgages. And in China, the mortgages, like we think here in the West, or let's say speaking specifically in the Irish and the UK market, you have got property prices that are based on mortgage rates. The mortgage rates are in the region of, we'll say, 3.5 times your earnings, 4 to 6 times your earnings, okay? It was 3.5 times in the Irish market. They just agreed to put it up to 4% or 4 times your earnings. I think in the UK, it's like 6 times your earnings or thereabouts. Correct me if I'm wrong. I see Johnny is watching in the YouTube or in the Facebook group. So anyway, the bottom line is that this comparatively means that you can only borrow so much. So if I'm earning 100,000, I can now go out and I can take a mortgage of 400,000. And that allows, that kind of limits or puts a cap on what I can borrow. If you're in China, what you're looking at is that there's no cap. And in places like Beijing, people are buying properties that represent 50 times their annual earnings. And so it is really, really difficult to actually go out and do this. Guys are actually having to group together with other family members. And you have a situation in China in particular where the family members, you might have grandparents, parents, and children all buying one piece of property, because that's how much was involved in how you're actually able to afford to kind of put a deposit down. Another thing that's happening in the UK market, you got the property downturn is now hitting house builders as their sales are plummeting. And I've heard that developers are warning that their sales have dropped off by as much as 50%. So that is definitely a concern in the UK. And one of the problems, and what might happen in the UK, as we have seen here in the Irish market, is that once sales drop like that, what happens is that the developers themselves will turn off the faucet. They'll basically say, right, no more development until we know that we can actually sell this. And so they'll cut back. And the problem is, like the UK, like the Ireland, the UK market has a bit of a housing crisis, and they're not building enough. And therefore, this could actually end up in forcing the market into a worse situation where actually there's not enough houses to go around. And in a couple of years' time, you'll find yourself in the situation that we are here in Ireland. Now, Ireland, we have an absolutely brutal housing situation. And I'm going to tell you in detail. I was speaking to one of one of a friend, actually, I think he's here on the call, Sean, we were talking yesterday about this and some market insight. He's saying that 2 of the sales, he's a property agent, selling properties and stuff and renting properties. And in the process of selling some houses, a couple of house sales have fallen through. And that is tech workers pulling out of deals because they don't know what the future holds for them. And obviously, we're going to be getting into that today, but the thousands of workers in Facebook, Amazon, all these places around the world, there's thousands of workers being laid off. And so naturally enough, a lot of people that are in the tech sector are just threading carefully because they really don't know what the future holds. Interesting to see whether TikTok lays off anyone, because certainly it seems to be going from strength to strength in recent times. But what was really, really interesting, and that what really blew my mind, and Sean explained this to me last night, is that they have just started listing a property in South Dublin, in the Sandyford area, and it's a 2-bedroom apartment, and they put it up on their system, listed it to rent, and they had 600 inquiries in 1 hour. Now, I have never heard anything like that in my life. That is 600. That is 1 inquiry every 6 seconds for a complete hour. And when you think about it like that, that just gives you an idea of just how desperate people are. And Sean went on to explain how they're trying to get people out of property that, are basically overholding. And the reason they are overholding is because they can't find somewhere to move on to. It's all fine and well to kind of give somebody notice and say, you have to move on. I'm going to do up the house or whatever you might be deciding to do. But if somebody can't move anywhere, then you're looking at potentially making somebody homeless, which is not really a runner. And therefore, they continue to stay there. They continue to pay their rent. And you're in a situation where, geez, what can I do? So the market is absolutely in chaos at the moment because of this. And there's newspaper headlines all the time about this. And what's made matters worse, and I'm just looking at a headline here, that hotels across the country are currently being occupied by Ukrainian refugees. And we have now welcomed 62,000 Ukrainian refugees into the economy or into the country. And we already had an absolutely acute housing crisis. And when you introduce another 62,000, and it's right to bring them in, obviously these are people that are running for safety from war and persecution from Russian invaders. But the reality is that where are they going to stay? So putting them into hotels, the very same thing could well happen, where you have a hotel room that is occupied by Ukrainians, and all of a sudden you say to them, right, guys, we're coming up to the busy season. We need you guys out. Where are they going to go? Are you going to put them out on the street and make them homeless? This is going to become a problem. Now, I see somebody coming in with a question as to whether a recession is a recession really a bad thing. Well, it depends. If it impacts you insofar as if you lose your job and there's no prospect of you getting another job, that's a pretty bad thing. If it means that house prices fall, well, then, obviously people kind of see that and say, oh, that's a good thing. But the problem is that the reason house prices are falling is nothing to do with the recession so much as it's to do with the affordability. And if you're in a situation where interest rates on your mortgage are going up, and on top of that, your cost of living is going up. So you're paying more on fuel, you're paying more to fill your car, you're paying more to heat your house, you're paying more on groceries. Like everything across the board has pretty much gone up. So the amount of money you have to service a mortgage or to service rent has shrunk. And now on top of all of that, interest rates are going up. So that little bit of wedge you had left after your new higher increase of costs, that little wedge now has to go and pay for rent or a mortgage. And if you're talking about a mortgage going up by 2 or 3%, gone, you're now out of business. So a recession could be a really bad thing for that reason. And you're not also talking about house prices falling. What you're talking about them is being rebalanced based on the affordability of it. So if you could afford $600 a month mortgage, now that has gone up to $700 a month, okay, or $800 a month perhaps. Does that mean that the house prices are now cheaper? You're still paying $700 or $800 more. So the reality is you might be paying less for the property, but you're still paying the same amount of money relative to your earnings. And so that's where the problem is. Anyway, it's going to be a big problem, I think, and we're going to continue. Construction activity. What has happened now, it has been reported by the Irish, it was the BNP Paribas, which is a real estate agency here in Dublin. They've reported that Irish construction activity has contracted in October, and that's the fourth time in 5 months. And it's been dragged down by civil engineering amid caution among clients about the weakening economy, prices, and supply shortages. And it's interesting that this has happened because it has been going through a bit of a boom. But what's happened is the number of residential units constructed this year is at 27,417. And that compares with 12 months ago, 34,846. So it is interesting. And that is obviously not a good thing because we're already in the midst of a housing crisis. What has happened because of building construction cost inflation, what it has done is it has actually pushed a lot of projects off the shelf as no longer being viable. So a lot of big apartment buildings are no longer viable. And what's really interesting, I read there just in the last day or so, is that UCD, which is the big university in Dublin, University College Dublin, they have, I think, 25,000 students, and they had plans to build another 1,200 student apartments on the campus to accommodate more and more students that want to stay there. And they've actually had to completely abandon the project because it is no longer viable due to construction costs. So that is obviously another problem. 1,200 would have reduced the amount of students out looking for accommodation, would have reduced the amount of people that are moving into houses and moving into flats and stuff, and they would instead be able to stay on the university campus. That is a problem as well for the housing situation. Now, what's happened? We got job cuts across the board. And this is one of the reasons why construction is going to start falling off, is because you're looking at job cuts throughout the construction industry. And tech unicorn Intercom is going to cut jobs. Now, that is one of the smaller companies, but it's cutting 124 jobs here in Dublin. But what has been announced in the last couple of weeks is just crazy. We have got job losses now. Looking at Amazon are looking at a headcount reduction of 10,000 jobs. Meta, which is Facebook, Instagram, and WhatsApp, they're laying off 11,000 workers across the world. Twitter, Elon Musk has already announced that he's laying off 3,700 full-time employees, and he is now about to lay off 4,400 contractors that actually, they weren't full-time employees, but they did work for the business. Now, Stripe have announced 1,100 jobs. Coinbase have announced 1,000 job cuts. Shopify have announced 1,000 job cuts. Microsoft have announced 1,000 job cuts. Snap, which is the owner of Snapchat, have announced 1,000 job cuts. Even Netflix have announced 450 job cuts. So you can imagine what this has an impact. All of those jobs are gone. That's less offices needed. And the tech companies were really very quick to go out and take office space, and they would spend a fortune doing up the offices. And so what you'd be looking at is an office building that's taken, big office building, and they'll spend, millions on the fit out. A lot of those projects have now been put on hold, and the entire project is just, that's it. So contractors are feeling that pinch. Now, it's not all bad, because if you work for banks, you seem to be in better shape, because Permanent TSB have just announced that they're going to invest 25 million euro in the former Ulster Bank branches. Now, Ulster Bank is pulling out of the Irish market, and in the process of doing that, they're handing over a lot of their bank branches to Permanent TSB, which is, it's good for obviously the people that those bank branches can be valuable. And I've bought many bank branches over the years, and it's good. It can be a good investment. So you're not looking at losing your tenant. You're now looking at replacing Ulster Bank with Permanent TSB. Also, and this is kind of more local news, but on College Green, one of the most historic buildings on College Green is the Bank of Ireland, and that is going to undergo a 36 million restoration. Now, the Bank of Ireland building on College Green. It's right across from Trinity College, is front entrance. It's a very, very grand old building. It's hard to believe it's a bank because it is actually, it used to be the Irish Parliament building back in the 18th century. And I mean, it's a fantastic building. If you've never been to it, you should go and see it because it is absolutely beautiful. Anyway, that's about to undergo 36 million revamp. Now, it's funny, on one side of the market, you've got people saying that the construction is falling off, but then the Grafton Group, which is a big DIY retailing group, and they own Woodies DIY, which is I start at 1 o'clock every day, and you can watch the full replay of this on my YouTube channel. My YouTube channel is Gavin J. Gallagher on real estate. So just type in at Gavin J. Gallagher and you'll find it in YouTube. I have live stream every week on Wednesday at 1 p.m. So anyway, going back to it, Grafton Group have announced that they are going to make a big profit this year. They're in line with previous years, and they're saying that they're bringing in, 1.76 billion in sales, and it's just incredible. So they're talking about a £100 million share buyback program, and so clearly somebody is doing pretty well in this market at the moment. And it'll be interesting to see, if the construction sector is falling off, but at the same time you've got Grafton Group doing really well. So people are still investing money in doing up their homes and stuff, and it's good to see you guys in the Facebook group. Gavin, Dermot, Luke, nice to see you. Keelan. Anyway, getting on with this, we've got housing targets set to rise next year according to the Taoiseach. So Varadkar Leo has come out and said that there is a deficit at the moment of between 70 and 80,000 homes across the state. Now, 80,000, if you consider that just this year, we're now at 27,000. So that means that if we were to build houses every single year at that rate, it would take us the best part of 3 to 3.5 years just to meet the deficit that we currently are. And that's not taking into account people coming into the country, people, looking to move, doing all that kind of stuff. So you're talking about being behind the ball about 3 years. Now, obviously, on top of that, we've got the Ukrainian refugee crisis, and it's hard to know what is going to happen there. If Russia decides that they're going to continue this battle, then they could be here for another couple of years. If Russia pulls out and decides that they've had enough of this adventure, that maybe the Ukrainian refugees will be able to move back home. But what are they moving back home to? There's an awful lot of buildings that are being demolished and cities that are being leveled. There's no power, there's no water infrastructure, the roads are in bits. So they probably won't be moving back. So they're probably looking at people being here for a long period of time. So certainly, when you think about it like this, if you think about the market impact, you think about what are the opportunities as an investor or as somebody that just is looking for a job for the future and all that, housing is going to be acutely in demand for years to come. And you have to think about it like that. It's there simply is not going to be enough houses. They can never build enough houses to meet the current demand. By the way, what do you guys think of the Movember? I absolutely hate it, by the way, just so as you're aware. My wife hates it, and it is coming off on the 30th of November. But while I have it here, I am raising money. And if you go to my Facebook page, you will find that there is a Movember. Just look up Gavin J. Gallagher in Movember if you want to donate to my fundraising. And the purpose of the fundraising is for men's health, and in particular, men's mental health and suicide prevention. One of the big problems with suicide with men is men tend to hold a lot of problems and difficulty and stuff inside, whereas ladies tend to go and actually seek help when they have, when they're dealing with depression or whatever. They'll go and speak to somebody, they'll get therapy or whatever. Men tend to think, I have to toughen up, I have to kind of be a man and show this. And so this is what happens. And so as a result of that, men tend to be the ones that commit suicide. And I can tell you, if you head into a very, very difficult recession, if you lose your job, if you've got no money, if you've been doing really well and all of a sudden you're doing not so well, that can all work on the head. I've been through it back in 2008. I lost like literally millions. And it was very, very difficult because you're trying to manage all your stuff. You're trying to like feed a family and things. And suddenly you're on the back foot, and that can put pressure on people. And sometimes they end up taking their lives. So that is what my Movember campaign is in support of. Anyway, one of the things that we're looking at is the interest rate increases. So last week I was announcing to everyone that the Fed in the US had increased rates by 25 basis points. The Bank of England had increased rates by 25 basis points, and the ECB had increased rates by 25 basis points. Basis points basically are, there's 100 basis points in 1%. So just work it out like that. The Bank of Ireland rate for new mortgages, they have already implemented that increase. So if you have a mortgage, you're going to see that it has gone up in the Bank of Ireland. Meanwhile, permanent TSB is currently holding mortgage rates as they are. So you're in a better position if you're in the permanent TSB than you are in the Bank of Ireland. Meanwhile, the European Central Bank have actually come out and warned that there is a risk of market correction. And that is interesting. And what they're saying is that there is a repricing to date has been orderly with market volatility, but that may not be the case in the long term. And what that means is that, interest rates, as they continue to rise, what it does is there's a rebalancing of values. And that tends to be kind of, the rates go up, the values come down a little bit to kind of compensate for that. But there can be like a Black Wednesday type panic where people just start to kind of say, do you know what? This is going to be more and more of this. I need to get out. And it triggers kind of a panic sell. That's what they're warning, that there is a risk of that now. Now, in the market here in Ireland, just to kind of let you know, planning has been lodged for 491 apartments in Monkstown. That is a big development. That is going to be across 10 blocks on a 3.5 hectare site. 3.5 hectares is approximately, I guess, 7 or 8 acres. So it's a pretty big site. And they're going to be building 288 one-bedroom units. Now that is interesting because the development that I've done recently, the developments that I'm involved in, we've never really been one to go with a lot of one beds. 2 beds tend to be more popular, and the houses tend to be more popular. In this case, 288 one beds, 32 2 beds, 153 there's going to be 2 bed units and then 13 3 bed units. So it is interesting to kind of see. I think what they're talking there, they made a mistake in the typo. There's 153 2 bed units, and there's also going to be studios there. So 2 studios. Bord Pleanala has also just approved. Bord Pleanala, if you go and apply for planning permission in Ireland, okay, so if you have a piece of land and you want to build something on it, you have to get permits that have permission to do that. It's called planning permission. And whenever you submit a planning permission, people can object to it. Okay, usually it's your next door neighbor or it's the guy across the road. And they might have good reason to. Maybe, you want to add this huge extension out the rear and it's going to be looking in on top of them or something like that. So people can have a legitimate reason, but sometimes you have vexatious reasons. And that is somebody that just doesn't want you to kind of, to do well. And they just say, you know what, screw this guy. I'm going to delay him, or I'm going to hold it up. Now, when that happens, usually, and also the local authority themselves, they can say, no, we're not going to give you this planning permission. You can appeal that decision, and the appeal goes to a place called Bord Pleanala, and that is the appeals process. Now, they have been through a bit of a ups and downs, that's their own ups and downs lately for various reasons, but they've just approved a 360 million euro development, and it is a planning permission, and it's a 10-year planning permission, and it's for out in Dunne. There is going to be 1,323 housing units built. And so it is a pretty big project, and it's good to see those kind of things. But you can see they need to get a 10-year planning permission because building that number of units is going to take years. You can't do that in a short space of time. The permitted scheme is going to be 625 apartments, 352 duplexes, 346 houses. And then there's going to be 132 social and affordable homes. Whenever you're building a development of housing, you have to give a certain percentage of it to social and affordable. And that is, you don't give the houses away, you have to sell them at cost to the local authority. And the local authority will put people who are on housing lists into those houses. Something that has been in the High Court this week, and this is something that reminds me of back in the good old 2008 and 2007 in the boom years. Sean Dunne, okay, now back in 2007, 2008, Sean Dunne was the man when it came to development. A lot of people disliked him, but he was very, very successful for quite a few years. And he ended up buying a house on Shrewsbury Road. Now, Shrewsbury Road, for those of you who are not familiar with Ireland or Dublin in particular, Shrewsbury Road is the most exclusive road in Ireland. There's only, I think, 17 or 18 houses on Shrewsbury Road, but each of them would be 20 million to go, 10, 20, whatever, huge money to go and buy one of these houses. And they are huge mansions. And all of the guys that would be on the Irish rich list would all own a property on Shrewsbury Road. Sean Dunne, back in the day, bought a house called Walford on Shrewsbury Road, and he paid 57.9 million euro for this property. And anyway, the bottom line is what he did at the time during in those days. When you bought a property, you had to pay 9% stamp duty. Now, 9% is very, very high, but that was the rate that everyone was paying back in the day. And that was one of the reasons why, when the housing market collapsed, the government's income collapsed, because they were collecting 9% in a booming property market. So every time they bought property, they were getting 9% stamp duty as a kind of an extra payment. So they had these huge sums of money coming in the door. But as soon as the housing market collapsed, bang, all that money was gone. And so they were in a difficult situation. But one of the tricks back in the day was called a subsale. And so stamp duty is what you pay when you go and you put your contract into the courts and they stamp it. And that is your way of proving that this transaction has been completed and that the property is yours according to law. And one of the tricks that you had back in the day was you didn't stamp it. You left the thing and you left it on contract. So you would go and you would sign an agreement with somebody and you would sell the property. And so say I buy a property for 50 million, I pay for the 50 million, here's your 50 million. Now, I can only sell that property on if the stamp has been put on the property. But what I might do is decide I don't actually want to sell on the property. So until I found another buyer. So what they would do is they would pay 50 million to the seller, but they would not bring the contract in and get it stamped in. And what they would instead do is try to find somebody else to sell that contract to. And then when that contract was done, the new owner would get it stamped and he would pay stamp duty on it. And as it turns out, so you would basically rest it on contract and you wouldn't pay any stamp. Now, might sound all complicated, but when this guy went and bought this property for 57 million, he did not pay stamp duty. And what he decided to do was that trick, to try to kind of play out that trick. And he has just been told that, sorry, that trick is not going to work. And he's been ordered to pay 14 million in stamp duty, as opposed to the 270 grand that he was thinking that he's going to have to pay. So it gives you an idea of just what when things go wrong in property, they can really go badly wrong. Some local news: Dunne stores have agreed a deal for the Dundrum town centre. So there's a bit of a shuffling around going on in Dundrum. House of Fraser, which is this huge, big UK what would you call it? It's a superstore. I don't know. House of Fraser, anyway, it's a big department store. And House of Fraser went bankrupt last year, and so they had a big unit in Dundrum shopping centre, and they have given up that it's obviously being handed back to them. And what Pennies have agreed to do is to actually move into House of Fraser. So Pennies are going to be moving from their current location into the House of Fraser unit, which is a much bigger unit. And what are Pennies going to do with their unit? Well, it's been handed back, and who's going to take it? Only Dunne stores. And this is going to be interesting because if you know Dundrum Shopping Centre, Dunne stores are going to be located below Tesco. And there's also Marks and Spencer's, all located like one nearly on top of each other. So they're all food companies. So it's going to be interesting what impact it has on those retailers. By the way, guys, questions, if you have any questions, I will be going through all the questions in a little bit. But right now, I'm just covering this stuff, and then I'll answer your questions. So coming to the end of the property thing, we're looking at 1.25 billion euro has been invested in Dublin's private rental sector this year alone. So that is just in 2022, which is a huge amount of money. I mean, 1.3 billion. And the largest deal so far this year has been 123 million purchase of a scheme in Crumlin by Greystar. So you can see there is big money being spent in this whole sort of sector. Now, also, I noticed that there's a property in Cork up for sale, and French investors are buying it. And what's interesting is we've been seeing, certainly I've been seeing in the commercial sector, that it has been mostly dominated by German funds. And all of a sudden, the German funds are stepping back slightly, but we are seeing they are being replaced by French investors and French funds. So this is interesting to see. And so just watching this space carefully, it's interesting to see them buying down in Cork. The rents in Cork now are not bad, 35 a foot. That's a pretty good, strong price for the location. And then the final point before I move on to the next topic is South Dublin apartment scheme for sale this week for 20 million, but it represents a yield of 5.1%. Now, if you remember, is it last week or the week before, there was a scheme in Dublin and it was for sale at a 4.8% yield. So here you go, you can actually see that it's already, the yields are creeping out to go from 4.8 to 5.1. That represents hundreds of thousands of a saving on a deal of this size. So it is quite interesting. So I'm going to do I'm going to talk quickly about the crypto meltdown that's taking place. And the reason, like, this is a real estate channel. This is, this talk that I do every week. This is mostly about real estate and property investment and stuff. But we have to talk about crypto because there's just so much going on with this collapse of FTX. And this guy, Samuel Bankman-Fried, he goes by the initials SBF. Samuel Bankman-Fried, somebody's asking a question, who are Greystar? Greystar are a huge, big fund that are based in here in Ireland. They're like an American fund. Anyway, getting back to it. So Samuel Bankman-Fried, like 6 months ago, this guy was the god of crypto. He was worth $32 billion. And the guy, or he was worth $16 billion personally. His company was worth $32 billion. And you're talking about a guy that had, a godlike status in the market because he was bailing people out here, there, and everywhere. People were calling him the next JP Morgan. And fast forward 6 months, and the guy has just declared personal bankruptcy of 650 million, having gone from a 16 billion net worth, flying in private jets, living in the Bahamas in this like private estate, and suddenly it's gone. So in the last couple of months, you've had Terra Luna collapse, you've had Celsius collapse, you've had 3 Hours Capital collapse, you've had now BlockFi look like they're going to apply for bankruptcy. You've got Voyager, who are Samuel Bankman-Fried bailed out both BlockFi and Voyager. He gave them 250 million and 200 million respectively. And he also extended a line of credit to BlockFi of $400 million. That's all gone by the wayside. So FTX was a centralized, nothing to do with blockchain. Yeah, that's true. I'm not talking about that. I'm just talking about the crypto collapse here. And the bottom line is Samuel Bankman-Fried, who is Samuel Bankman-Fried? He's a 30-year-old. So he's, in the same kind of age kind of category as maybe Mark Zuckerberg, a billionaire in his 30s. Not many people achieved that. So he was kind of given this kind of godlike reverence in the investment market. People were asking him for, give us your wisdom on this and that, all this kind of stuff. And what's interesting is it seems like the guy has been playing all sorts of funny games behind the scenes, and he has been lending money that his clients have put into FTX, and he's been lending it to his own private investment fund, which is called Alameda Research. And so that is a big no-no. And what's happened is he's been found out, liquidity has completely collapsed in his business, and he's had to declare bankruptcy. And what's really interesting is the speed at which this happened. Like, it went from him being this hero to everyone to a newspaper article coming out in I think it's Coinbase, have this article that comes out, and on the 2nd of November. And it said that the value that is assigned, that, you know, the value of the assets in his group is actually almost all made up of his own tokens. And that would be like me saying, hey guys, I'm worth 100 million. And you say, oh, wow, you know, what do you own? And I say, well, I own, 100 shares of a company, that I own. And I reckon it's worth 100 million at the moment. And that's basically where my 100 million comes from. It was these guys. This is one of the dangers about crypto, is you're talking about ones and zeros on a computer. And and I know a lot of people are going to give me flack about this, but the reality is that there's no intrinsic value to crypto. Whereas when you look at a piece of property, we'll say, if you're buying a property asset, it's a piece of land. That piece of land you now own. Okay, what have you built on the piece of land? You've put down concrete, cement. You've built your foundations. You built blocks, brick, wood, glass, slates, whatever it is. You filled that with items that cost money and you have to pay in order to construct. That's all intrinsic value. When you're talking about crypto, the reason it has collapsed from 32 billion to zero is because it was never worth 32 billion in the first place. What happened is that you have people selling an asset and just passing it on to the next person, and the next person saying, wow, he made a load of money on this, I'm going to buy it, and it's going to make a load of money for me. And that kind of continually going on. It's kind of like, but people all deluding themselves. But as long as you're not the last person holding the share, the delusion is very profitable. And so that's basically what happened. So he was making a fortune. Like, the guy is smart. He was a quant trader, and a quant trader is one of these kind of mathematical kind of geniuses that are able to buy and sell. He noticed that you could buy Bitcoin on the US exchange at, we'll say 100. And he was able to sell that immediately in the Japanese exchange at 110. So he's making a 10% profit instantaneously. We call that arbitrage. So if I can buy something for 10 and sell it for 11 instantaneously, I haven't held it for a week or anything like that. All I'm doing is literally, there's sellers here selling for 100, and there's buyers over here buying for 110. And I just simply buy from you, sell to you. There, I've made 10%. You don't have to add value. You don't have to do anything. So naturally, extremely profitable. The fact that he noticed that is incredible. And he went and he made something like 20 million in a very short space of months. Now, he went on and he established FTX in 2019. FTX has just gone from strength to strength. And what's interesting is they're like a stock trading house. They do margin trading and they do derivatives. Derivatives are, if I believe a company is going to fall in value, I can short that stock. That is a derivative. Instead of buying shares in the company, I'm buying a derivative of the share in the company. And that is that I believe the share is going to fall, and therefore that's it. Now, who were the early investors in FTX when it was set up? Binance. And Binance is actually turned out to be the biggest competitor in the biggest crypto exchange on the market, invested in FTX in its early days. But FTX grew so rapidly that it actually became quite a significant player in the market, and actually we could say viewed as a threat to Binance. And so there's a guy that runs Binance called CZ, and you should remember that name because it's going to come up again. Anyway, fast forward, and you've got FTX going from strength to strength. They were bringing people in, like celebrities were endorsing it. They were paying huge money to guys to go off and say that, I'm buying into, people like Matt Damon, I think, have been movie stars actually going and saying like, you should go and buy crypto and all this kind of stuff. So these guys were able to pay millions. And I think they even had an ad in the Super Bowl, and to put an ad in the Super Bowl cost something like 60 million. These guys could afford to put an ad in the Super Bowl. Now, why do you need to advertise so much when you're some sort of an FTX, like an exchange or something like that? Because the more customers you get in, the better it is for you. And why is that? Well, as it turns out, it looks like this was one big Ponzi scheme. And what happens is you're putting money in and you're being promised, like a lot of the people that were putting money in, they were being promised 8% return on locking up their money, locking up their coins. So imagine at the time, you're talking about negative interest rates. Here in Europe, we were paying negative interest rate. So if I had 100 grand sitting in the bank, I would be charged by the bank to keep my money there. Whereas if you put your money into FTX, you would get 8% a year. So you'd be getting 8,000 instead of negative rates. So of course, people were encouraged to put it in. The problem is you had to lock it up when it was in there. And so people put their money in, it gets locked up. And what is happening to that while it is in there? Turns out that Samuel Bankman-Fried was transferring it to all sorts of things and basically making investments left, right, and center. And as it turns out, these bets have not paid off. Crypto has gone down. You have Terra Luna, all of these different guys. And what's happened is the market has collapsed in value for FTT tokens. Now, that's FTX tokens. When they collapsed in value, the company no longer had the ability. There is a thing called liquidity and there's a thing called insolvency. And an insolvency and a liquidity, they're two separate things. Okay, if you have a company in a liquidity crisis, it means it doesn't have the cash to pay its debts, but it has the assets. So you could have a situation where, for example, FTX, he said it was worth 30 billion at one stage, and he has all of these debts. And if you suddenly can't pay your way, and you're sort of saying, okay, I'm not able to make the payments, but the company's worth 32 billion. So give us a couple of weeks and you'll get your money. That's what a liquidity crisis would do. And it would basically mean that you're asking people, look, give us time. We have loads of assets here. We will make you whole and you'll get paid. The problem is that when there is a liquidity crisis, sometimes the value can actually fall and the confidence in that share can fall. And that's what happened here. And so when it becomes a liquidity crisis becomes an insolvency crisis is because the market has lost confidence in the value of your shares and stuff, and it dumps them on the market. And when it dumps on the market, you no longer have all of that value. And so what we're looking at now is an insolvency crisis. They no longer have the money to pay their debts, and therefore they're bankrupt. And that is what has effectively happened here. So it is being described as the Lehman moment. Now, those of you who are young, you probably have heard this word before, like Lehman Mother. But I remember back in 2008, it was around September 2008, and I was living in Spain at the time. And I can remember there was an awful lot of talk about, banks were under huge pressure. There was too much debt, everything like that. And everyone was getting bailed out. And Merrill Lynch were taken over by Bank of America, and there's all of this kind of stuff going on. And everyone was saying Lehman Brothers is next. And I can remember them kind of saying they won't allow Lehman Brothers to collapse because it's going to be too detrimental to the market. And so everyone believed right up to the last minute that they would bail out Lehman Brothers. They wouldn't allow it to fail because it was kind of seen as too big to fail. And the guy that was running the company was the CEO was a guy called Fuld. And Fuld was a very, very kind of arrogant guy. He had his own, private elevator and, all this kind of stuff. And he refused to accept the price that somebody was offering to buy him to kind of save the company. And so they said, you know what, that's it, we're out. And they bailed on him. And the company declared bankruptcy. And I can remember seeing it on Sky News, people walking out, like people that were earning 200,000 or 300,000 a year, walking out on the street with boxes holding all their personal possessions. They've just been, they're not even laid off. The company that they're working for is now bankrupt. So out on the street, hundreds of them pouring out of the business. And that was a real moment. And what that is, the biggest problem with that is there's a cascade or a domino effect. And you've got this company was worth billions. Now it's bankrupt. It's worth zero. And so all these other companies that might have lent money to it, their loans are now gone to zero, but they might have borrowed that money from somebody else. So the person that they borrowed the money from now is looking at them potentially going to zero. And so he's going to end up holding the can. And he might have borrowed this money from somebody else, or he might have investors that could go to zero. And so it has this knock-on impact where it cascades one to the next, and you end up in a situation where dozens of companies, just from one bankruptcy, dozens of companies can go bankrupt at the one time. And my personal belief, and I could be wrong here, but my personal belief is that you're going to watch this FTX moment have a similar impact, and there's going to be widespread bankruptcies across a lot of crypto market. And any business, like you're not going to, like Bitcoin can't go bankrupt because Bitcoin isn't an entity. Bitcoin is just a currency. So Bitcoin could fall, go down in value and all that kind of stuff. But the reality is it is not going to go bankrupt. Now, the value of it could collapse, down very, very substantially. It could go down further and further. But I do think Bitcoin will probably be a good investment. If it does go through this like massive fall, it'll be a good investment. And years from now, you'll see that you're in the same way. I remember in 1999, when the dot-com crash took place, Amazon shares, they all went falling down like crazy. And you could have bought Amazon and you could have seen it like a 30x return on your money, or maybe a 130x return on your money over the last 20 years. So it can be a very, very good time, but there will be a load of companies, a load of exchanges, a load of businesses that are going to go wallop because of what's happened with FTX. And apart from that, the confidence in the market is just going to disappear, because you're going to have people saying, how do I know that this company is capable of surviving? How do I know that my money is even safe there? Like, how do I know it's not being lent out here, there, and everywhere? And I think what's actually happened with this guy, CZ. So I've seen some of the guys in the comments are actually talking about how this all took place. And what you've actually got here is the CZ decided, he found out that FTX was in a bit of difficulty, and he publicly tweeted that he was going to dump all of his shares on the market in this token. And in doing that, it's very obvious what he was trying to do. He was trying to bankrupt the company, because by doing that, he effectively decided that let's dump all my shares. It will actually push down the value of FTX. And in the process of doing that, I might actually be able to buy FTX up. So that's effectively what he wanted to do. That's effectively what happened. FTX got under huge pressure, and Samuel Bankman-Fried, SBF, went to Binance and said, here, listen, buy us. We're out of business. You've won. Let's buy us. The problem is Binance didn't realize that SBF was into all this funny business, transferring money around and paying Alameda Research and all this. And so they said, you know what, there's nothing we can do here. We're out. And so sure enough, they've gone bankrupt. And Bitcoin fell down to 15,000. Remember, 1 year ago, Bitcoin was at 66,000. So people who talk about, crypto being a great thing, like you guys are nursing serious, problems at the moment. And what has caused all of this? Effectively, greed. Now, there's a video that I put in my YouTube channel. Anyone who's watching in YouTube will actually be able to find it there. It's called the 4 E's. And what the 4 E's are, these are the things that I talk about as, these are the things that will damage an investor, okay, that will damage your portfolio, that will cause your portfolio to collapse in value. And what happens is people, they let their ego get the better of them. They let their emotions get the better of them. They ignore the economy, and they don't take into account the fact that events can take place. So your ego, your economy, your ego, your emotions, the economy, and events. Those are the 4 E's. They will take you down. Okay, you get too big for your boots with your ego and stuff like that. That will take you down. Your emotions. In this case, these guys all got hyper greedy. They all thought it was easy to make money, and they just sort of lost their way, we'll say. The economy then falling, creating, and then these events like FTX and stuff. There's going to be bankruptcies all over the place, I think, as a result of this. And what's interesting is when I made this announcement on my podcast about a year ago, I actually found that I got a lot of flack for it. I got a lot of people telling me, Gavin, you don't know what you're talking about, you're an idiot, blah, 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 all this kind of stuff. And the reality is that if you find yourself out there like defending crypto or sort of saying, you're wrong, it's not, disagreeing with somebody who has an alternative view to yourself, just be careful. I'm not saying I'm right, you're wrong. I'm just saying, be careful that you yourself are not so caught up in this that you don't see the problem. And this is like what happens with people that get caught up in conspiracy theories and all that. They're kind of inside their own head and they don't realize that they're being duped. And there's a thing called, there are two things. There's the cognitive bias, okay? Cognitive bias. There's a type of bias called continuity bias. And that is where you believe that what you're experiencing today will continue to be the case going forward. You don't take into consideration that there could be some sort of a collapse in the value. You don't take into consideration that the business model you have today might not still work tomorrow or in a year's time or whatever. So people go and say, oh, this is brilliant. I can go and I can make an absolute fortune doing this particular thing, and I'll do it for the rest of my life. Perhaps you've only got 6 months. That's why people who get into YouTube or for example, let's use Conor McGregor as an example. Conor McGregor doing incredibly well at the moment, okay? In terms of financially, okay? He's been making all this money. He was the #1 boxer and everything like that. Then he broke his leg. He's been going through a little bit of difficulty trying to get his fight form back. But he's still making all this money. He's kind of a hot product, we'll say. But like all of these guys, like football players, like stuff like that, your career is a small little piece of time. Conor McGregor will not be making as much money in 5 years' time. He won't be making as much money in 10 years' time, any more than people talk about Mike Tyson. Okay, Mike Tyson, back when he was a prime fighter, he in 1 year he made something like $800 million, and he went and he spent all of that money and blew it all. And fast forward, he ends up bankrupt. Okay, 80% of football stars in America, something like 70% of Premiership footballers in the UK. Something like 70% basketball NBA players, all of these guys, all like very high percentages of them all go bankrupt when they get out. And the reason is that it gets inside their head that they're going to continue. This is the continuity bias. They believe that the money they're earning today is going to continue to flow for the rest of their lives. And the reality is you have a window of about that much time when it's going to be the case. And after that, the money's going to dry up. And so if you get your lifestyle up to a certain level where you're flying everywhere, private jets and stuff, you're going to come crashing down to earth pretty quickly. And my concern, not particularly a concern, but I think to myself that the likes of Conor McGregor, I think it's quite possible that Conor McGregor will end up bankrupt in, say, a decade's time. And why will that happen? Because he's got a taste for this lifestyle. And he's spending money on Rolls Royce and private jets and big boats and all that. And you get a taste for this lifestyle. The cost of keeping a lifestyle like that is huge. And when the money starts to dry up, you have an ego to maintain. You've got to live this lifestyle. You got to be driving the latest Rolls Royce. It'll be interesting. So it's not going to happen in the short term because he's making so much. But at some point in the future, there's a good risk that will happen. And so I've seen it happen to a lot of big sports stars and stuff. So this is a risk. Anyway, guys, we're reaching near the end and I don't have a huge amount of time to go through questions, but let me ask a few questions. If an opportunity to acquire a commercial property presents itself from a motivated seller and speed is of the essence, this is a great question. Is it possible to use a construction company to purchase the property with a view to moving it into a personal pension sometime in the future? The short answer of anything is possible, but it doesn't necessarily make it a sensible option. And the reason I say that, Johnny, is if you're in a situation where, let's say, there's a motivated seller. Whenever you see a motivated seller, somebody who has to get out of the property as fast as possible. And that means you're going to find a really good deal. You can probably drive a hard bargain and you can get the price down. The problem with that is when you decide to go and use this company, say, for example, you buy the property, you'll have to pay the various costs that go with that company. And so let's say, for example, stamp duty or whatever. So you pay your legal, you pay your costs and all that kind of stuff. The company now owns this asset, and it maybe it paid, let's say 100 for the asset. Okay. Now, if you got it at a really, really good price, and then at some point in the future, you want to move it on to something else, like a pension, or you want to sort of move it to a different company later. The problem is that you're going to have to pay all of those costs again. And what you're going to have to pay is you're going to have to pay for the solicitor that's working for your construction company, but you're also going to have to probably pay another solicitor who works on the other side of the transaction. A lot of the time, one solicitor won't work on both sides of the transaction because they're conflicted. The other thing that you're going to have a problem with is usually what happens is the revenue commissioners or the tax, the inland revenue people, the tax people, they will turn around and say, right, did you transfer that at the correct price? And what happens a lot of the time is, and it's similar to what I talked about a little bit earlier when I talked about the guy resting it in contract, a subsale, is you're trying to save as much money. So, for example, I have a property in Spain, I have a nice villa down there, and it's in the name of a company. And what I wanted to do was transfer it into my personal name. And in order to do that, it was going to cost me 70,000 in stamp duty. And I can remember thinking, shit, that's a lot of money. Like I'm going to have to pay 70,000 just basically to change the name from this entity to this entity. So then I started thinking to myself, what if I transfer it for €1? Then there'll be no stamp duty. But that's where they'll come after you and say that you transferred something at a fake price, and therefore you're not able to do that. So that's one of the drawbacks of it. The other thing is, and I don't know about UK pensions, but I do know when it comes to Irish pension law and all that, it's very, very restrictive when it comes to third-party transactions. If you're doing something that is close, so if you have a company and it owns an asset, and that same company owns a pension, transferring the company's asset into the pension could be problematic because it is not an arm's length transaction. And so I would definitely check it out before I go there. Now, if you have a different company with a different pension, it might be a different story. But one of the other issues you're going to find is that there's things called pension trustees and all that. And if you happen to be involved in one side of the transaction, then a lot of the time that rules out the pension fund from actually doing anything with it, because it's again looking for an arm's length transaction. You're not able to, like for me, selling my home, for example, I say, why don't I just transfer it to my own pension? So my pension will own it. That is not, unless there's a completely unrelated person renting the property, unless it's being bought by somebody completely unrelated, the pension trustees probably will not like that very much. So that is one of the things. Let's have a look at some of the comments here in TikTok. And God, there's so many of them. It's kind of like hard to figure it out. I'm just going to see, how will higher interest rates affect construction in Ireland? They are already impacting construction in Ireland because projects that were taking place, that were planned to take place, are now deemed not viable, and so they're being cancelled. Let's see, I'm going to finish up pretty quickly, guys, because I usually do this for 1 hour. What about all the empty properties all over Ireland? Building new is not as clean cut as it sounds. There's tons of properties out there, and yes, indeed, there is opportunities. But when you're buying, like, it doesn't mean that they are ready for use. Like if you go and decide that you're going to turn like a warehouse or something like that that's empty, you can't turn that into apartments. You have to flatten it. But also you need zoning, like zoning property. All the land in the country is zoned. Some of it can be zoned residential, some of it's zoned industrial, some of it's zoned commercial. And when you decide, okay, let's go and build houses here, well, if the zoning doesn't permit it, then you're not going to get that. And we've seen that ourselves, like there's people that are going and they're building apartment buildings, and we kind of say, oh, that's a nice building, we should do the same. And then you find out, damn, we can't actually do it because the zoning doesn't permit it. With the current government recommendations on new taxes, will you ever actually own property? Well, I don't really know exactly what you mean by that, but like you always own property, but like it might be unattractive, and it might be, you know, like I certainly here in the Irish market, it can be kind of unattractive from a tax point of view to own property, but it can be like it's a long-term business that you're getting in. If you're thinking about something short-term and making a load of kind of cash on the side, that's going to go up and down with the interest rates and stuff like that. So it can have a bit of a problem. You might struggle with that in the short term, but typically property is a good hedge against inflation. So at the moment, when inflation running really, really hot, if you own a property, you might have restrictions on the amount you can increase rent and all that, but the value of the property will increase over time. And so it should be that, whereas the salary that you earn and things like that might not keep up with inflation. Typically, real estate and property does keep up with inflation. So, guys, I hope you've enjoyed this. I've gone over an hour, so I'm going to close out. But good to see you all. Same time every week. If you guys want to catch up, if you're only joining now and you want to have a look at the early part of when I was going through the news and stuff, it's all recorded and it's all over in my personal YouTube channel. That's Gavin J. Gallagher on real estate. And you'll find that just by looking at Gavin J. Gallagher. All right, guys. Take it easy, and we'll see you soon.